You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Options Bootcamp. Time to break down this crazy world of options for you, the basic stock trader. Maybe you're thinking about dipping those toes into the options waters. Maybe you've already done so. Maybe the water is a little bit too deep. Maybe it's a little bit too scary. Don't worry, we'll be your lifeguards. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting Options Insider Radio Network. Reminding all of you out there, if you're listening just to the Bootcamp feed, you're missing out on a whole bunch of other great options-oriented content. The Option Block twice a week, TWIFO, every Thursday this week, and futures options, volatility views, you're into VIX and all that cool stuff. That's every Friday. And then, of course, we have other shows on Education Wednesday, like Options Playbook Radio, that would certainly interest a lot of the audience of this program. Do interviews every Tuesday out there. We talk about crypto, the only show on the planet that really breaks down the world of crypto derivatives every Monday on the Crypto Rundown, and a whole bunch more shows for advisors and everything else. Check it out wherever you're getting this. Upgrade to the full network. It's easy. Just click that subscribe button. It's free. Check it out. And, of course, keep those questions and comments coming, too. We do love to hear from you folks out there. Let's see who we're hearing from on this program today. I am pleased to be joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the Options Bootcamp program, sir.
Good to be home, Mark. Good to be home.
Yes, it is good to be home. Are you ready to answer the folks' questions, sir? For they are legion.
Heck yeah, man. Let's do it.
All right, let's do it. It's time for your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. You know what's going to happen now. You guys take the reins with your legion, your litany of questions about all sorts of interesting options topics. Since these are crazy times, we like to kick it off with a little bit of love. Remember, if you like what you hear, you can keep those reviews and ratings going on all your platforms out there. Keep new folks discovering the network out there, just like Julian Mittman did. He wrote in and says, "Hi, Mark. Just found your radio network and cannot seem to get enough. Filled with wisdom, wit, and educational wealth. Studying options and learning how to use them for investing has become a pleasant and interesting journey. Keep up the spirit and continue to deliver the best options content." Well, thank you very much, Julian, and everyone else out there who's taken the time to write in with such kind words. We're very pleased our content is helping you folks navigate these waters. If you like what you hear, you want to join Julian and others, keep rating, reviewing out there on your platform of choice. There are a lot of people out there in the same boat as you. They're new to these options things. They want to learn about them. They want to explore these markets, and they don't really know where to turn. So help give them a place to turn. Keep rating and reviewing and sending those folks to the land of the old boot camp. And Dan, there are other folks out there who have questions as well, including in your community over there at Market Taker Land. I'm sure you've been fielding them just hot and heavy of late out there. So what's coming across your radar? What would you say is your Market Taker Mentoring question of the week, sir?
Yeah, Mark, I just had somebody ask me this question just yesterday, and I think it's a good one. So this is one of our students who we were chatting actually, and he said, "Hey, you know what? I took your MTM Smart Income System class, which is like a covered call, cash secured put, a whole system that we've created." And he said, "I love it and it's working, but where do I go from here? Like if I, this is covered calls, this is great for my long-term investing, my IRA, whatever, but like I want to dig a little deeper. Where do I go from here?" And I thought that was a good question because covered calls really are designed for investors, for people who own stocks. I personally, 95% of the time, do them only within my IRA, which I do in my IRA like literally every day. And so I thought about it for a second and I said, oh, well, a natural extension is what we call income trades, which are becoming, once again, sort of the thing to do in option trading, very popular. And those are things like credit spreads, call credit spreads, put credit spreads, iron condors, time spreads, and things like that, which are in the same family as covered calls and cash secured puts, but less for investors and more for active traders. So it's kind of like the next logical step if you want to immerse yourself a little bit more into a little bit more active trading.
The land of income trading and all of its various forms. You can, of course, check out those in our archives as well, listeners. We have many episodes devoted to the many and varied strategies that will generate income. As Dan said, kind of the covered call is the starting point for a lot of you out there writing a call against your stock. Then you can get into cash secured puts and all these sorts of fun stuff. All types of credit type spreads out there await your perusal. Check out our archives and maybe check on over into the MTM community if you want to ask questions about such things themselves. But a lot of you have been deluging us with questions. Dan, folks seem to have risk reversals on the brain. We got a couple of questions here along similar lines. First off, we have Scott Somer, regular listener, chiming in. Says, how about doing a options boot camp on the proper day to set up on a bullish risk reversal? I like a Tuesday, but hey, to each their own. I'm just kidding. And then we have a similar question from Jim Park. He says, can you tell me what is a risk reversal and how it works? It sounds the same as a short strangle. Am I missing something? Well, yeah, you're missing a bit there, Jim. So maybe let's start with that one and work our way back. What is a short strangle, of course, is you're selling usually two out-of-the-money options, an out-of-the-money call typically, and an out-of-the-money put. Could be against something else, could be just doing it because you think the underlying is going to stay in that one position. That's a short strangle. You're selling that. It's called a strangle because you kind of want to squeeze that underlying and keep it from moving for the lifespan of that strategy. Of course, if you buy the strangle, it's the opposite. You want it to explode, but we're not talking about buying things right now. All right, now the flip side of that, the risk reversal, comes in two different flavors. Scott's asking about bullish risk reversals. Bullish risk reversals obviously involves two separate bullish legs, listeners. In this case, selling an out-of-the-money put, typically, the strike and the level out of the money, that all depends on what you're looking at, what your strategy is. But it's typically selling an out-of-the-money put. So remember, you're selling a negative delta option. I know it gets a little bit counterintuitive. Think back to your early elementary school negative numbers classes. You're selling a negative, that becomes a positive. So that's a positive delta trade. And then on top of that, you also are going to buy an out-of-the-money call against that. That's also a positive delta trade. Add those two together, and you have some sort of positive delta trade, a.k.a. something that's typically bullish, a.k.a. your bullish risk reversal. The flip side of that is what is the bearish risk reversal, also known as the collar, if you're doing it in conjunction with stock, which is now you're buying that out-of-the-money put. Maybe you're concerned about a drawdown in a particular underlying, and you're also turning around and selling an out-of-the-money covered call. You're buying the negative delta. You're selling a positive delta. That means that's also negative. So the combination of the two, they're both negative. Add them together. You're getting negative deltas, a.k.a. a bearish strategy. Put those two together with owning a particular underlying. You have a collar position that we just talked about on our last episode. So long answer to your question there, Jim, which is, are they the same as a short strangle? No, a short strangle is selling 2 out of the money options, whereas a risk reversal is going to be buying one and selling the other, and it depends what your outlook is, what you're going to do. If you're bullish, you're going to sell the put and buy the out of the money call. If you're bearish, you're going to buy the out of the money put and sell the out of the money call. All right, that's the difference of strangles versus risk reversals. Dan, I'll let you take a spin at the, as Scott puts it, the proper day to set up a bullish risk reversal, sir.
The proper day to set up a bullish risk reversal.
Again, you can't beat Tuesday, right? That's the day for risk reversals. We all learned that in basic options class, right?
Yeah. Geez, I mean, I don't know if there's really a specific day to set them up. I mean, I don't know. I mean, is there somebody on one of your other shows that was suggesting there is? I mean, I would say that there's not necessarily. I mean, especially if you're doing them fairly balanced, like the call and the put, fairly comparably equally out of the money, because I mean, if it's a Friday, both the call and the put are going to lose the same, well, not the same, but a comparable amount of value. And Mondays, when that, I don't think there's a particular day personally. I mean, is there different counsel that I'm missing here, Mark?
Yeah, I'm not sure what he's getting at either. So I think let's go with Tuesday. Let's go with that. Yeah. Everyone does their risk reversals on Tuesday. If you want to clarify a little bit, Scott, have at it. But yeah, maybe he's referring to something else. I was mentioning on another show. It's not coming to mind right now if he was. But in general, again, if you're going to keep him in the same expiration cycle like people usually do in the same weeklies or the same monthly expiration, the actual day you do it on doesn't really change that much. I mean, it depends if you're going to be buying some premium, maybe you want to do it a little bit earlier in the cycle, give yourself some time to do it. But other than that, there's not really the Tuesday is obviously a joke, but outside of that, I'm not really sure what you're getting at. So a little clarification could help, but hopefully the least that helps you, Jim, with the short strangles versus risk reversal. Let's move on. Greg Watson. So I've been listening to your show for a while. I love the shows, and Mark, John, and Dan. So he's going back, I believe, to the early days, Dan, with the John Critchley episodes. So he says it here. I had to start with episode 18, as I couldn't find anything earlier on Apple Podcasts. Yeah, that's an issue. I've mentioned that before. If you guys want to go, our shows have been running for a while, many of them, including this one. So certain platforms like Apple will limit you guys to like the most recent series of episodes. So if you want to get the full kit and caboodle, our website or our app are the two best places to get everything. You can go back all the way to the dark days of 2007 with the very first ever options podcast, if you are so inclined. All right, let's see here. He goes on to write, I haven't listened all the way through as I go back and listen to the same ones 2 or 3 times. Well, that's good. That means you're getting the concepts and you're really drilling them in. Good job, Greg. He says, I just found out about your app from one of your early episodes. Now I have started at the beginning. All right, he's discovered episode 1. My problem is I understand the Greeks separately as you taught in episode 2 or 3, but I don't understand how to use them together. If I see delta's number, then theta, and finally vega, how do I put those 3 together? Do you have an episode for that somewhere? He also mentions, also, I'm not trying to be a jerk. Please don't have the guy from England on again. He sounded arrogant. Thank you, Greg. I have to go back and listen to the early episodes, Dan. It's been quite a while since we did the early episodes. I'm not sure who he's referring to with the British fellow. I'll have to go look and see. But Dan, as the author of the tome on the Greeks, what do you have to say here for Greg, who's having some problems putting his delta and his gamma and his theta and his vega all together, sir?
Yeah, Greg, this is awesome. I love where you're at, as we say on the south side of Chicago. I love where you're at on the Greeks here. I look at learning options as just a series of S-shaped learning curves, and you definitely got to the peak of a couple, and now you're ready to make the journey up another one. The way I look at it is each of the Greeks is totally separate and independent of one another, but they all work in harmony, in concert. I guess I'll just run with that analogy. I don't think I've used this before, but, I guess sort of like a band or orchestra or something, There's a bass guitar that has its part, there's a rhythm guitar that has its part, and there's drums that has their part. They're all doing their own thing, but they all kind of fit together. And that's really important, in a lot of our classes, because, being a Greek sort of fella, a lot of our classes really are pretty heavy on it. One of the ways to look at it, I mean, there's a lot of utility on how they all interact, but just think about if you're to buy a call, right? If you're to buy a call, as the stock goes up, you make money on delta, but as time passes, you lose money on theta. And so if you think about it, like delta and theta are kind of like one and the same in a way, like they're extremely related to each other, and you can kind of use your expectations on how much the stock might rise over a period of time and see how much you'd make on one and how much you'd lose on the other, and forecast, hey, if I'm right, do I actually make money, or do I break even, or do I lose money? So I mean, maybe just planting that little seed can make you explore just that one use case, and maybe think about some others on your own. But yeah, I love how far you've come, and keep running with it. Keep pushing yourself, because the Greeks are super important.
Well said, sir. And yeah, it makes sense, Greg. If you're new to the space and new to options, you'd have a little bit of a learning curve adjusting to the Greeks. And I think you're doing it the right way. Learn about them piecemeal. Learn what delta is. Learn what gamma is. That's probably the one you're going to have some of the most trouble with. Then learn how theta and gamma play off of each other. Then add vega to that mix. And hopefully by the time you get to vega and have a good handle on them, you'll start to see how they interrelate. And for a lot of these things, if you're playing like a lot of our audiences in very near-term weekly equity options, things like vega and other stuff aren't really going to be huge players. There's going to be a lot of gamma and a lot of theta you have to pay attention to, and obviously delta as well. So it's going to depend on your use case, which one is most prominent for you. It's different for someone who's out there slinging the leaps in the S&P or something like that. A little bit of a different beast out there. But it is an interesting conversation, and one we all have to come to grips with over time. I remember getting all of our risk runs back on the floor of the CBOE, and they break out all your Greeks independently, and you have to kind of come together with some sort of understanding of where your largest risks are and what you can do to mitigate them. I think you're on the right journey there, Greg. Keep at it. And if you have other questions, hit us up out there. All right, next up, another frequent listener. We've got Revon Gorges. He says, are there any board members selling any of their stock in companies like GME and AMC? They are smart people. They know it will be years or decades before their shares hit these prices. Like if they know their companies are going bankrupt soon, isn't it best to sell off? Yeah, well, that's been a frequent topic of conversation. A lot of people have asked us about it as well. By the way, if you have more questions about GameStop, I know a lot of you did, we put together a cool playlist on our YouTube channel of all the different shows we did touching on the GameStop drama in some capacity. You're talking TWIFO, you're talking this show, you're talking the option block, talking vol views. We had great interviews with the heads of the OCC and the Securities Traders Commissioner Association about how all this stuff happened and why it happened. So a lot of great content there. Check it out. It's all aggregated in one place over there on YouTube, where you can find them individually, of course, on our network, wherever you're subscribed to this. This has been a question I've had, a lot of people have had, not so much with the insiders, but with the companies in general. I mean, GameStop was handed a gift, a lifeline, to sell some stock at absurd levels, and they didn't take it. I think there were some regulatory issues around their earnings announcement. They have a window. They had not beyond January 25th, I believe, could they trade anything, and so that was their limit there. Unfortunately, with their earnings announcement, I guess they could have moved it up, and you probably could argue that they should have, because they were handed a lifeline and they did not take it. But I did look right before the show when your question came in here, Revon, about what the insiders have been up to. This goes through February 11th. And we have seen some directors, looks like they're exercising some options because they have acquisition prices of 0 on some of these options and getting a couple of thousand shares at a clip here. And then they got quite a few. So it looks like they're picking up more, some of these guys. On the 15th of January, it looks like most of the other trades were all sells. Some big lots, like 90,000 on the 13th. Back when the stock was in the low 30s. So that was, I think, a lot of people's assumption. When it first gapped up into the low 30s, everyone's like, holy crap, this is crazy. Let's get the heck out of Dodge. So we saw a lot of selling around that time by directors. Of course, some of this has to be scheduled ahead of time as well. But there was mostly sellers out there, even though some folks were also exercising their options to pick up shares, undoubtedly with a plan down the road to sell them at these inflated levels, including someone dumping 720,000 shares at $19.99 back on the 12th of January. So yes, there was some, but I think the bigger question, the bigger mystery, this stuff is all obviously highly regulated, but the bigger mystery is why didn't GameStop get their act together to take advantage of the gift they were handed? I think that's probably one of the reasons why their CFO is no longer there. But let's keep on rolling. J3 Dingle, another frequent listener, says, isn't there a saying that 1987 wiped the smile off the options curve? Did game put the smile back on? Another question, game related. Yeah, for a brief period, at least it did in GameStop there. If you're not sure what he's referring to, listeners, if the smile is the skew, effectively is talking about skew. And skew in most modern options parlance and knowledge really was born back in 1987 because we saw the huge meltdown of the market and these options didn't really perform like anyone expected. And that's when they started saying, maybe we need a different way to model these things, and thus the modern concept of the skew was born. And, back before then, they kind of, as you mentioned, they had a smile. They kind of just graphed calls and puts at similar implied vol levels, looked like a smile, and everyone was happy. And they realized that's not really the way it should be. So yeah, for a brief period, there was 1,000% implied volatility on GameStop. So yeah, both legs were extremely volatile, and there was a smile probably there for a very brief period. So a little bit of good historical humor there from Mr. J3 Dingle. All right, let's go to... Got so many ones here. All right, let's go to this one here, Dan, because it's a fun one, and we like to open with fun and end with fun, and also it's got looks like some other elements to it as well. This comes from Zeely KW, and he writes, wow, all in caps, exclamation point. He says, you couldn't imagine the way I screamed in pure joy, almost with a tear to my eye, when you called out my email at the end of OBC 120. Thankfully, I was pulling into my driveway. I had to stop and send you another email. Well, hopefully you're not driving right now, Zeely K. If you are, pull over to the side of the road. We don't want to be responsible for any accidents out there. He says, haha, I know you guys get tons of emails, and wow, just to hear you call that out felt like winning the lottery. Voices are heard here over at OBC. Yes, we listen to you folks. We like you folks. That's why we do this show. He says, wow, man, other shock. I kept thinking as I wrote, I wonder if they'll shout it out. Nah, they must get 1 million emails a day. Haha. You guys are inspiring. I talked with Dan a couple of weeks ago. There we go. Very interested in his mentoring class as soon as I can afford it. Truly blessed to be a listener of the show. You guys are the roots to the stem of my options knowledge. Newer to this, but feel like I'm making good progress. And I owe all of it thanks to you guys. Just to prove it further, I attached a screenshot of my portfolio as of yesterday. Today was a little sideways. Owe it all to you guys. P.S. If you ever need, he offers some help for cinematography work. Well, thank you for that there, Zeely K. But yeah, he sent a screenshot as well, Dan, of his portfolio. It's like he's up almost doubled. He's up 83%. It's a smaller portfolio, obviously, but looks like he's doing well. He's long some calls. So hopefully, Zeely KW, we've also taught you other strategies than everyone else is doing out there, which is just gobbling up calls and hoping for the heavens. But it seems like what you're doing is working out. I'm glad we've taught you a little bit out there, hopefully teach you some more risk-mitigated type approaches to how to use these options things in your own portfolio. What do you say to that, Dan? A little bit of love from the listeners, and it sounds like it's working out for him. He's actually seeing results in his portfolio, sir.
That's awesome, man. That's super awesome. Great job. Keep it up. Keep at it. The more you learn, the more you earn, and that's super exciting. Cool. My brother's a cinematographer too, as a matter of fact. So we got that in common.
There you go. There you go. See, listeners, we listen to you folks. We read all the emails that come in. We see all the comments. We obviously don't have a chance to get to all of them every show. And by the way, if your questions do come in between episodes and doesn't seem like there's a chance to get them on boot camp in a reasonable amount of time, we do route them to other shows as well, so you folks won't be left holding the bag out there. So keep those questions and comments coming. We do love to hear from all of you out there, and hopefully you're like Zeely out there, and hopefully this is helping you improve what you're doing in there in your portfolio. You're not just swinging for the fences, but actually starting to put on some more higher probability, lower risk type strategies going forward. And Mr. Dan, if they want to talk about said strategies and maybe figure out a way to have someone help them out during these crazy times, where should they go? What should they do?
Yeah, head on over to markettaker.com, and we're glad to help you with whatever you need. That's what we're here for.
There you go. MarketTaker.com. 2 T's is the place to go. Check out Dan and everything he's got cooking over there. Fun community and all sorts of other fun stuff. Remember, if you like what you hear for this show, anything else we do on the network, A, make sure you subscribe to the full network because you're missing out on a whole bunch. And B, if you don't mind it, if you like what you hear, leave a little review on your platform of choice. It does help a legion of new people discover the program and find a way to start trading these options things a little bit more responsibly. Of course, check out the rest of our program we have coming up tomorrow. TWIFO, This Week in Futures Options, Episode 2 of Option Block, Friday Vol Views, and it all kicks off again on Monday with the Option Block and Crypto Rundown all the way through to another Education Wednesday and another episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.